If you're not making mistakes, you're probably not swinging that hard. And honestly, it really depends on where you come from, right? If I came from a big family office, why would I go take a bunch of big swings? It's not really the stage of the family's generational wealth that needs to be put at risk. I used to work with a lot of families when I was in the legal field. So, it really depends who you're dealing with and what their risk tolerance is. Just as an aside,
welcome to Deal Flow with me, Michael Pulio, the go-to destination for high-level real estate and private equity professionals, including institutional investors and market experts. I talk with industry professionals week to week on everything real estate, prop tech, VC, and capital allocation. Today, we're excited to welcome Ray Mazzie, managing partner at Southern Waters Capital, to the show. Ray is a leader in the real estate development and alternative investment space with a deep focus on ground-up development of rental housing, including built-to-rent and multifamily properties. At Southern Waters Capital, Ray leverages his extensive experience to source investment opportunities, contributing significantly to the real estate landscape with projects that adapt flexibility to changing market conditions. His team's strategic approach to investment and asset management set new benchmarks for the industry. Ray, thank you for taking time to be with us today. How are you?
Thanks, Michael. Good to be here.
Yeah, great. So I know we kind of did that little intro there, but if you could just kind of in your own words, give me a little bit about your background and what you're focused on today.
Yeah, no. So I guess by education, I'm an attorney. I did practice law for a short period of time and worked in government as well. So after getting out of school, I jumped in actually the startup world, which is where I met my now business partner. After my equity vested at that shop, we started Southern Waters Capital together. I had done a few real estate transactions, purchases of businesses, and a little bit of government work as well through a public-private partnership. So earned my business partner's trust, and then we started Southern Waters, and actually, believe it or not, started out as a credit strategy as a hedge fund, and then we wound that up and focused all of our time on real estate development, just because that's where we found our skill set to be the most applicable. And obviously our relationships there are strong as well. And then of course, running a fixed income strategy on leverage in a rising interest rate environment is not exactly a good idea. So all signs pointed to double and triple down on real estate development. And since we've done that, we've had quite a fast ride here. We're a little bit over 2,700 units in our pipeline now, and it's been, I think, just over 4 years technically since we started the firm, but really a little bit over 3 since we kind of made our true and only focus on real estate development.
Awesome. Well, that's quite the winding road to get to this point, but also gives you kind of a good baseline foundation and the legal side. And I know you guys do a lot of ground up construction, which we'll get into. And I imagine that background, the government work, the attorney type work really gives you a good foundation and maybe a leg up on some of your land competitors.
Yeah, there's like two things that what you said kind of brings to mind. The first is, we always say we kind of learned how to speak bureaucrat simply from working in different agencies and other government positions while I was before I was doing this. And then also, to the winding road comment, one of my favorite phrases is "man plans and God laughs," and it seems as though that rings true every day. And it makes for an exciting life. And as long as you're doing what you like with people who you love, then the ride's always fun.
Sure. Yeah. No. Absolutely. Yeah. So I think one thing that you said that I thought was pretty astonishing, and talking to a lot of folks in this space about their journeys that I don't hear often is wow, you got quite a pipeline for the 3 or 4 years that you've been doing this full time. I'd love to jump in a little bit and talk about what that looks like and understand a little bit more about maybe what that process is of bringing things into your pipeline and how you think about that. And then maybe from there, we'll go into maybe a project, but I got to know a little bit more about that.
Yeah, I mean, the first thing to make very apparent and known is the only way we were able to scale that quickly was by basically participating in joint ventures. And it's what we've pretty much exclusively grown the shop through. So, we like to say Southern Waters is usually the basis and location, and we bolt on a track record and a strong balance sheet with our partnerships. So what makes us different is we get into projects a little bit earlier than most. We'll actually assemble the land, go through future land use zoning changes and things of that nature. And instead of getting the project shovel ready, which most people think is, the best time to basically court a partner, we'll get into the site plan ready stage. And then we'll bring in a partner. We'll design that project together and then go pari passu through the project going forward. So really going through that joint venture process now about 7 or 8 times is now it's kind of second nature to us and very comfortable. We kind of know how these things shake out. And, we've found some really good relationships where we can kind of play the gateway role, the boots on the ground and the local knowledge to get projects that other larger shops may not have the time or even really have recognized these types of markets or opportunities where we're at. So kind of just is extremely accretive to them and a true add-on. It's not like we're cannibalizing any of their business or working in their markets or anything like that. So it's a win-win for both groups, at least so far.
Sure. Yeah. So without giving away your tried and true secrets,
Sure.
could you kind of walk through kind of high level a little bit about that development process? Could you maybe like bring it into a specific deal and kind of walk through just to give the listeners a sense of, okay, like how do you identify, right, these opportunities, and then that string that brings it from that initial identification all the way through to I don't know, either it's landing the JV partner or it's the completion of the project from your perspective, like whenever you are done with your work. Could you do that for us?
Yeah, no, definitely. And I mean, it's always funny. When I first started in this business, I thought it was super important. I went to business school. It's super important to have a methodology and a thesis and everything. And it certainly is. But you find that real estate is just so dynamic based off of where you're looking, what you're building, who you're working with, how you got into the deal, how you're going to finance the deal, how are the capital markets look. So it's just extremely dynamic. So the truth is that there is no set method to do this. And honestly, that's the part I think I love the most. And is probably the part that makes me feel most comfortable and not being replaced anytime soon, is that it isn't a set methodology. There's certainly things we focus on to make sure we identify the right market. So I'll just dive in and kind of give a quick example. But, we do everything from every type of housing, from condo towers to build to rent communities, attached, detached, garden style, multifamily, a little bit of hospitality and mixed use projects. So for me, really the first and foremost thing that I'm doing is I'm looking and seeing what does the fundamental supply and demand look like for those types of assets in a market that has, to keep it simple, positive net migration and at least 3 industries that are growing and durable, whether that's logistics and manufacturing, tech, energy, military, defense, education, something like that, or healthcare, industries that we think are going to be around for the long haul. And then once you have those 2 factors, and at a base level, you at least have a market that's probably worth looking at. And then quickly, don't waste any time. Go look at the rents or the lease rates, depending upon what you're building, or the RevPAR, if it's hospitality. You just want to understand that first and foremost, you have the type of revenue at the end of the day to support whatever you're going to be able to build. And once you understand that kind of revenue level and demographic data surrounding kind of your tenant or buyer, whatever it is for that scenario, and once you recognize you have a solid base of population with the right demographic characteristics, then okay, well, if I have these type of demographic characteristics with this type of supply, meaning I'll go look and make sure that there's, it's not oversupplied, or if there is a lot of supply, that it's old or inferior or in the wrong spot or some type of gap in the market in regard to supply. Then I'm like, all right, well, now I've got a market with the right characteristics to go into and see if I can find a project. And, finding the actual dirt is just like anything else, really. I'll be on Google Earth and I'll look at a bunch of different stuff. And then I've got a couple other tools that I use, but nothing really fancy. The only thing that my tools would do is kind of just aggregate data that's already publicly available. So maybe I have less tabs open from when I first started this business, but it's really just the same stuff. And, you're overlaying the future land use map with the current zoning and looking for good locations. And from there, once I find some stuff, I'll do the outreach myself. I'll make those relationships with both the Economic Development Corporation, all the professionals in the area, the city, county commission, brokers, and then mostly really like landowners and business owners. And, just start banging the pavement and smiling and dialing. And once you find something you like, if it's not big enough, you see if you can buy more stuff around it and kind of just put the puzzle together. So once we get everything put together, I'll bring that site to my trusted professionals, and they'll, give me kind of the lay of the land in regard to time, costs, hurdles, entitlement, schedule, all that kind of stuff to get the project to what I envision is best. And once I determine that process is worth the time and cost and brain damage, then we'll move forward with those entitlements. And like I said, once we get to site plan ready, we'll wave in and start courting joint venture partners. And after that, we'll finish out design, vertical design that is, and then take it to the capital markets. And in regard to what we do, we never leave the project. We actually run it all the way through. Our partners are usually vertically integrated, so where their skill sets are much deeper and where their staff is loaded up on a certain skill set, whether it's architecture, whether it's engineering, interior design, property management, whatever it is, in-house GC, then we'll of course lean on them to kind of take the baton there. But at the end of the day, we've already assembled a professional team prior to them coming in most of the time. Everything's always subject to change, but usually don't want to change anything at that point. So we really have that. We're the nexus of the relationship, right? So at the end of the day, we're still running through the project. But of course, when it comes to technical skills and abilities, we want partners to, have those that we don't. And from there, we obviously want to take advantage of that at every opportunity.
One thing, I have a buddy who's in a similar space, and he always says, whomever controls the dirt controls the deal.
He who has the gold makes the rules. So you might want to remind him of that.
Yeah, I guess it's, right. That's true too. Maybe sometimes that's the same person. So you do, you kind of your initial filtering, right? You're making sure you got a good market. It's going to make sense on the other side. There's space for that deal once it reaches its highest and best use. You've identified that market. It seems like there's quite a lot of labor-intensive work in establishing yourself in that market and then doing the outreach and the calling to the owners to ensure that you can, then find property. Do you typically are you kind of establishing one market and then trying to do a bunch of deals there, or are you kind of moving around markets? How do you prioritize the time? Because it sounds like you're not segmenting out to like callers or et cetera. So which is a little bit different than what I've seen for some other folks that are in a similar type of acquisition process or identification process. So how do you prioritize that time, and how do you determine how many markets to be going after at the same time, given your, shifting priorities there?
Yeah. So it's kind of back to the original thing. I wish there was a perfect, true method to the madness, but part of it really just comes down to, I think I have a really strong ability to know when to cut bait. Right. So, and I think I probably, they said, I think the actual fact is that we have 12 meetings on, we have about 12, takes about 12 touch points to make a relationship. I like to think I could do it in 3 or 4. So I'm good at making relationships quickly. I'm good at understanding if I should, if I should actually pursue something based off of a couple phone calls or a couple data points, just off of what I'm hearing. And then when it comes to like markets, it's really, when I'm talking to all my friends in the industry, where do I actually hear that the capital is flowing? And then, when you're picking up deals, it's like, where is it in the entitlement life cycle? Where is it in the actual development process? What's the cost of it versus the cost of everything? Because at the end of the day, when you're allocating time or allocating money, it's relative and you only have so much of each. And at some point you have to, like you're alluding to here, is decide where you're going to put that time and money. And I think, I probably am on the phone more than most. I like to think I work a little bit harder than most. And I also like to think I work a little bit more efficiently. So I cover a lot of ground. If you talk to any of my colleagues in the business, I can hold a lot of different things in my head. So certainly not the most critical thinker, but I've got a great rote memory. And so, I can spin a lot of plates at once. So like right now, to be honestly, like I have 7 or 8, depending upon if you count phasing projects going on. And I've got 9 or 10 that I'm betting in markets from Charleston, Knoxville, Northwest Georgia, some stuff in Central Florida, some stuff in Southwest Florida. So Jacksonville as well. And, it's just one of those things where you just run as hard and fast at everything that you find to be, worthy of your time. And then the second you see something kind of slowing down or you sense that it's not getting to where it needs to be, you get out of it. So it's kind of how I do it. And, I'm a true believer in God. And honestly, I think I've got a great ability to recognize the grace and opportunities that he puts in front of me from time to time. And, I kind of just follow my gut and it's worked out pretty well thus far.
Got it. So I wouldn't say it's not on feel, but there's some intuitive, there's a lot of intuitive,
it's just
aspects to it.
It's just so dynamic, right? Like one project might be a little bit more expensive, but it's a little bit further in the process. And I actually have a really deep relationship with the builder there or something like that. And I can pick up for any inefficiency I might see on the front end with my relationships on the back end. And then you also might find another deal where the guy's in distress and you just have to go buy the note behind the project and you don't have to spend any time on it because you're like, hey, I'm in a first lien position at half his basis and God forbid, I just made the default interest. So it's just understanding the risk reward, right? As you go forward and both the risk reward from a time value of money perspective and just an allocation of time perspective. So, yeah.
At this stage, given the number of projects that you're doing, I kind of have 2 questions. One is around a team, to the extent that you guys have a team that's working with you on some of this stuff. And the second question as part of that is at this point, about that time value of money, I assume there's some minimum project size that you're looking at. You're not, and I imagine over time maybe that goes up or shifts according to the capital and what they're looking for. But maybe you could just speak to those 2 things around sizing and then around team.
Yeah, so I guess I'll go with the size part first. So bigger is always better. It's how we feel. Usually like 250 units or more on the multifamily side, like 100 to 150 units or more on the build to rent side. Any type of hotel project we're going to do, I want it to be over like 120 keys unless it's unique and boutique and I see an opportunity. And again, I have some type of advantage there. But everything takes a long time, so you might as well just do bigger deals. And really the only exception to that rule is when I see a project where I'm like, I could actually just do that with all my own money. And at the end of the day, when you do the math, I just have to ask, do I want to take all that risk myself? Am I in that market? All those other questions we just went over. So the exception to the rule on time or size, I should say, is really whether or not we're going to have to use a partner in it. I prefer to do the bigger deals, right? So usually, I get people who reach out to me and they have a cool 60 unit project or something. And honestly, I'm like, yeah, that's really great. Like if I were you, I wish I were you, right? But if you're going to stay in it or you're going to try and sell it to me at, whatever, at some price that I don't agree with, then there's no room for us, right? There's no room for the spread. If I buy it off you, and there's no room for you to stay in if you contribute it. So usually what I've found is since we're doing joint ventures, the bigger the deal, the more room you make for everybody. And if you're putting in the work to assemble the land and really improve its value through the development process prior to bringing that partner in, they'll recognize it. And if you're smart enough not to try and scalp your partner who's helping you, and you create a structure where you guys both win, then the bigger deals are just so much easier to get over the line. And usually if you're going a lot bigger, even if, God forbid, I get run over by a bus, and everybody can sell that land and make out very well. So it's not it just allows for a lot more margin of error, which hopefully I don't have any, but I'm not perfect, that's for sure. And then I guess, the second part of that, the team, we certainly do have a team. I'm proud to say that a lot of my best friends work with me. So there's about usually, 5 to 7 of us, depending upon what time of year it is. We love to take on. Dean has some younger younger children, and they're like early 20s and stuff. So they've got friends that kind of cycle in, and we've had some good people, really, really good people who we knew would only be able to stick around for like a year or so because they had an investment banking job that didn't start for whatever, a little bit later. So, but yeah, teams just call it 5 to 7 people, and really we stay really light because honestly, when you do a development project, you have to hire engineers, you have to hire landscape architects, you have to hire all these people. So you can just lean on their team. So it's kind of crazy. We have five people running these projects, and you look at the actual project where there's like 40 or 50 people actually working the project, but only like 2 of them are on your actual payroll. So it's kind of nice. Granted, you are paying for those other people. But we've found that if you find the right engineering teams with great leaders on their teams, then you can kind of lean on them. And, as we build out our site contracting company and things of that nature, and we're going to get into capital advisory here as well, then, we'll have to build that team out. But I like to think of, the people who I admire most in this business, like groups like, Merrimack Ventures and Procopio companies and guys like that. And they really do kind of run a lean shop. And honestly, it seems like most of their people are in positions where you're just bogged down with I don't want to call it, they're more so like true tasks, right? Like running the accounting on 10 very, very large deals. I know it sounds crazy, but doing that at a house gets tough because it just gets complicated because there's a lot of special treatment in real estate and things of that nature. So just usually from the development side and the construction management side and everything like that, the teams are usually really, really tight and you make decisions very quickly. And, you don't need as many people as everybody thinks, and you can be a lot more collaborative, especially since you're joint venturing, right? Our team bolts onto another team, and a lot of those partners do have much more staff. But like I said, they're either in their like general contracting company, or they're in their engineering division, or their architect division, or their accountant division. When you actually go down to the decision makers, it's like 3 to 4 people. And I've found that's how you keep the action. And I've asked them before, because I was, it's cool to think about having a really big company sometimes. Then at the same time, it's not. And, I asked them like, hey, did you intend on the team being, ending up the way it is and things of that nature? And they're just trying to learn. And most of them are like, man, you want the deals to always come through you. You want to be the nexus of everything. And you obviously have to delegate, but at the same time, you want to make sure that you're the captain of the ship, and that really you only need a few strong crew members to keep it going in the right direction. And everybody else can either be outsourced, replaced, or done without. And I think that's what makes a durable business that has a really cohesive and focused strategy, right? If you have a bunch of people trying to steer the ship, it's not going to go the direction you want it to go. And even if it does, it probably gets there in a much less efficient manner.
Yeah, I think limit the bureaucracy, right, as much as you can, right? You don't need 7 people to say yes on one decision. Best to have something nimble. And I think probably another thing that is good about keeping a lean payroll is, I assume the land business has its ups and downs. It has its cycles, presumably. So maybe we could talk a little bit about that. We've been in a little bit of a wild ride as it relates to interest rates. And I think, and just like the economic cycle and the real estate cycle. And so, where you can go anywhere you like on that, but, in these last few years, as you've been developing this pipeline and finding new opportunities, the volatile nature of the underlying, real estate market and the Federal Reserve's actions, et cetera, how has that affected how does it affect landowners? How does it affect the venture capital or the venture partners and the capital side? And where does that put you guys kind of in the middle there? Yeah.
So we always say it'd be nice to be one of those value add guys and actually collect rent instead of keep writing checks. But really, all joking aside, it's kind of great to finally have a cycle happen while I'm operating in real estate. I would get it a lot over the first few years of our business. You've never been through a cycle. How do I know? You're buying right. You're doing this, blah, 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 blah. And very proud to say that we never had to change any of our actual search criteria or anything like that. One thing we did have to move was, we had to bump our cap rates up a little bit. And we had to certainly adjust for insurance and adjust for increased expenses. But as far as our guideposts for buying land, it never changed. And we were always buying at such a such a great basis that we were able to hold on to everything. So those are the things that I'm extremely proud of, right? Over the last 2 years, since March of 2022, Jerome Powell has been on quite the run. Obviously, we all know he gave us a little gift here recently, but certainly nowhere near what we need at the end of the day. But yeah, so now we've held on to everything we went after before the rate hikes. We were able to close on multiple deals during the past 2 years. We were able to close on new deals during the past 2 years. I've been able to expand the business and pick up projects that I would have never been able to have access to in a market where, in a ZERP era. So I've absolutely enjoyed the volatility. I've had some very scary days for sure. I've had investors pull money a couple of days before closing, but we figured it out and closed anyway, and all that kind of stuff. So, you just go through this stuff. And honestly, when you come from a background like mine, where I didn't grow up with a lot or anything like that, kind of everything's upside. So this has just been very fun, very interesting, terrifying, but kind of the haunted house I'm willing to go into. I'd rather go through this than an actual real haunted house. It's just kind of what I love. So really what this past 2 years has done is, really made those who are willing to dig in, work harder, be more creative, and be more principled and disciplined. Prior to this, we've all been rewarded. So, granted, I'd have a lot more projects out of the ground had it not happened. But now I get to hopefully say, in a few years, we went through the cycle, we held everything, we came out of the ground and everything we were initially intending on building and developing. And here we are on the other side, which I think will speak volumes. And in 5, 6, 10 years, when we go to really, really make a big jump, at least what I anticipate, then at that point, we'll have a great track record to lean back on and look at and say, hey, we've been in tough times before. We know how to operate, and we're great stewards of everybody's capital.
Absolutely. Yeah. It's definitely been a little bit of a bumpy road, but these last couple of years, but I think these are the times that, you sharpen the sword, right? And you get better and stronger, as long as you survive.
Yeah. We love to say it's been wartime for a while, and just make sure you're in the foxhole with all the ammo you need and the people you love, and just do what you can to get through the fight. And when the smoke clears, it's time to make the next push. So I think we're starting to see a little bit of clarity on where the markets are going. We're starting to see covenants get a little bit lighter, leverage come back. Equity certainly not in the market the way it was before by any means, but people are certainly becoming more motivated.
Sure. Yeah, I want to. You touched on a couple of times, like peeking at the vision a little bit on where you want to bring the company beyond where it is today. But I want to hit on that. Before we do, I want to ask you, one more question just on maybe structuring, but also just, when you find these opportunities, I know they're kind of all maybe in a different stage of the value chain, but are you taking title to these properties? Are you getting options on these on this land and then putting dollars out to improve the use? Or kind of how do you think about risk, right? Because if you're taking control of the asset and you're putting money in to buy it, it's obviously a different risk profile than if you're taking an option and then spending some money on it. And so maybe could you talk a little bit about how you think about that risk return, and maybe what kind of, when you're thinking about risking capital relative to what you're looking to get out on the other side? Because, it's different for everyone and depending on what space you're in.
Yeah. So the most important thing is I'm never going to put something under contract for a price that I think I can't just either assign it for or flip the deal before I even close on it, right? So I'm entering at a point, what a bond trader would say is below replacement cost is how I feel. I don't use options contracts, but I just use a traditional purchase and sale agreement with a very detailed schedule and the ability to extend and all these other mechanisms that help us get through the process and keep the seller happy. So really, that's kind of how we approach the initial kind of control aspect. And then from there, you just know how to do these things in the right way, right? So if I roll up to a site and I know the first thing that I don't like about it, it looks like it's got a lot of woods or something, I'm probably going to call somebody and say, hey, what's going on with the environmental here in regard to like endangered species and things of that nature? Or if it's got a lot of topo, maybe I'll call the guy in an area who I know did a geotech not too far away, or if my site contractor is familiar with it. So I'll like identify what I think is like the biggest risk. And before I even spend any dollars, I'll have some conversations, get an understanding of where I think I should start spending my money first. Because what you want to do is identify the deal killer as quickly as possible and leave and cut your losses. But it's again, a variable and dynamic process. And for us, it's pretty much the first 500 grand to $1 million is kind of just totally at risk. It just is what it is. You're making a big bet. So after that, though, once I spend about 200 grand, I'm pretty certain this project's I'm at least going to close on this dirt. I may not build it. I've never taken down a project where I didn't intend to build it. But the point is if I spend that much money and I haven't found something I hate about it and I still like the price I got it at, I'd finish it out and at least sell the dirt at re-entitled. Because for me, I can do the entitlements without any type of like real plan. Like if I just wanted to just do entitlements, not all the site feasibility work, like the physical characteristic and site feasibility work and all the other design and everything, I mean, I could get that done for probably like 50 grand. So it takes a little bit of time, sure, but it's not a crazy cost heavy endeavor. It's once you start going past zoning and land use, now you're like, all right, well, what am I going to do with this thing? And once you start to get in the design process, it starts to get expensive. And yeah, you're going to be spending $1 million to maybe $2 million, usually like $1 million to $1.5 million to get a project to like shovel ready, probably closer to that $2 million actually in today's world. But yeah, so that's kind of how that risk is assessed. And from like do I want to do this project standpoint, like we've got to at least be able to like 3.5x our GP money or else you don't want to do it. And kind of use the guidepost of if I could get out of this dirt really quickly for 80% of what I would make building it all the way through and selling it upon stabilization, then we'll probably sell it. But if it's a site where I think I can hold on to it or I want to hold on to it forever, then it doesn't matter what I can sell it for today. So that's kind of how I look at it from an approach perspective and like a deal level return perspective. And then for me to personally get excited about it. And then from there, I'll decide what we're going to do with it in regard to like the kind of long range plan.
So would you say that the process is similar to playing a hand of Texas Hold'em?
I'm not a poker guy. It's kind of funny.
All right.
Like, no, because each card that gets flipped over, right? You get your hand, you know what you're holding. They get their first, 3 cards or whatever it is, they get laid down.
Right. Yeah. Well, and you kind of like know, you get your hand, you look at it, you can decide, hey, like that, you look at that property. You don't even have to do anything, right? You just like, hey, this is like Warren Buffett will say that, it's like you can take unlimited strikes, you can go by, right? Like I don't have to, it's not a 3-strike game. I have unlimited strikes. So you can just keep letting things go by you and it doesn't cost you really much of anything other than your time. And then eventually you find that sweet pitch or you find that those hold cards, those 2 cards that, hey, this looks pretty good. I have to put a little money in just to see the next phase. And then once that's done, I get a little more information. I pay a little bit more for a little more information. And then eventually you get to the end and hopefully you've, played those odds correctly. I
would consider it, you're playing, instead of playing poker against all the people at the table, it's kind of like, the more crowded the market is, the more people that are at the table and the buy-in and the pot might be bigger. But at the end of the day, everybody's still playing the house because the house is the market, right? So, I think more than one person can win at the table, right? But depending upon how many people are there, will determine how much you have to put in to actually play. It's definitely a lot like that. It's interesting. It truly is one of those things where you kind of just have to, you're making the whole way you're just making marginal bets, right? You're just putting a little bit more down, a little bit more down, a little bit more down. And you're like, all right, at one point you're like, all right, we're at the point of no return now. And that's kind of how you play it.
Yeah. And it's like, similar to the concept of pot odds. And, it's like, okay, well, what's on the table and what's the incremental bet I have to make relative to my probability of success? Right?
I'm good at poker. I know the concept,
but it's intuitive, right? Yeah. There's you're working it intuitively through the process. And then, obviously the more bets you have some diversification, and then there's like time diversification. So you started these at different times, and therefore they're going to break ground at different times. They get delivered at different times. And so you're kind of like diversified across geography and project and time. And then you're also able to make incremental bets, which are all ways to kind of minimize your risk. I think one thing, and then we'll get into kind of like the vision that you were hitting earlier was, it sounds like you said you're usually bringing in these joint venture partners before the design phase. So when you had said like that really expensive piece, which sounds like a lot of really expensive labor, effectively, right? Is that $1 to $2 million of like, what is it going to look like? What does the site plan fully built look like before they can actually go and break ground? That's when you're bringing in your partners before that really capital intensive phase.
So short answer is yeah. Long answer is we're still splitting that cost with them going forward. But it obviously lightens the load extremely. And, we'll kind of produce we'll have everything on the horizontal side almost done, right? We know, look, this isn't an approved horizontal design, but we know we have our utilities here. We know our retention should go here. Depending upon the product type, we might make the zoning, we might make a few different site plans. And then when we talk to our partners, we're like, hey, if I know this partner is a build to rent operator, then we're going to show them and start with the build to rent design. I might find a multifamily guy and we might be able to squeeze a site down and sell a piece of it and build the other half, right? So it really is, it's kind of funny. At the end of the day, I kind of know how to speak to Main Street, how to do all the bullshit in between, and then sell it to Wall Street. And it takes a lot of that bureaucratic skill and BS to be able to do that middle part. But yeah, I mean, the reason we don't want to design anything is because I know if I was on the buy side of the trade, no matter what you design, I'm going to complain about it just to help beat up the price. Why would I, even if I like you, I'd be like, yeah, I would have put the park over there. So, half grand fees are kind of a loss. So it's just kind of one of those things that I found. The further you go in the process, maybe you find the right partner and it's way easier, right? You never know. Where I think preservation of optionality and getting in at the right price is kind of our biggest risk mitigation tool that we have at our disposal. So bringing the partners in at that point, not only from an economic standpoint, like you said, or alluded to, is extremely great. But at the same time, it also lets me really, really widen my buyer pool. And when I say buyer, I work with an old bond trader, so we talk in that kind of sense. But really, it's when the partner comes, my partner pool is a lot larger. So it helps out very much.
You're selling, someone's buying.
Yeah, right? At the end of the day, you're exchanging stuff. I'm just holding some of the bag.
Right. Yeah. So awesome. Yeah, no, I really like what you said about the optionality and keeping optionality.
Well, I made the mistake the other way. That's why I know that.
Sure. And like, I'm going to set it up just right for this guy. Right. Yeah.
Thousands of mistakes. We keep an issue log, and I'm pretty sure 95% of the issues on that log are mine. And we try to make sure we don't make the same mistake twice. So it's interesting. I've got 4 years of mistakes in an Excel sheet that I can look at and remind myself how stupid I was in the beginning and how less stupid I am now.
Sure. Yeah. No, I mean, I think if you're making mistakes, it means you're going out there and you're doing battle, right? And you're having conversations and you're doing deals, or you're trying to put stuff together. Otherwise, you're just hanging out and you're not learning. So
if you're not making mistakes, you're probably not swinging that hard. And honestly, it really depends on where you come from, right? If I came from a big family office, why would I go take a bunch of big swings? It's not really the stage of the family's generational wealth that needs to be put at risk. I used to work with a lot of families when I was in the legal field. So, it really depends who you're dealing with and what their risk tolerance is. Just as an aside, a lot of people will ask me, like, how do you know what partners are good to work with? Usually you know right away. First off, it's going to come down to personality, which is sad, but it's the truth. Because you're going to go through shit with each other. Like whether it's one partner's fault or the other partner's fault, or it's just the circumstances of the deal or the capital markets or whatever. You're going to go. It's a marriage. You're going to be together for a while. And we intend to hold everything long term if we can. So we really do think about these partners as family at the end of the day. And really, what I've found is after personality, it's truly your risk tolerance needs to be aligned, because if your risk tolerance is extremely different, you guys, meaning the two partners, may not even determine an issue as an issue, right? Like I may see something and go, that's not a problem. You may say that is a problem. And then even if we did agree on it, you may say it's not a big problem. And I may say, no, it's a catastrophic problem. And now we're going to have different solutions for it. And once if you can't fix the problems together, then you shouldn't do a deal together. Because like I said, we know there's going to be problems. So you need to make sure that's aligned. And I was taught very, very early on. It's impossible to do a good deal with a bad partner. So for us, it's extremely, extremely important. And trust me, I've been left at the altar, burned, chosen the wrong partners. I've made every mistake there is. And we just do our best not to do it again. And at the end of the day, like I said, if your personalities match and your risk tolerance matches, then kind of the rest you could shake out. Or else that individual or that group would have never came to the deal in the first place.
Sure. Yeah, no, a lot of nuggets there. I know we don't have a lot more time, but I do want to give you a couple minutes to just talk a little bit. I think you briefly mentioned that you had a couple other expansions beyond land that you're working on. Anything you want to share here? I'd love to hear kind of where do you see this company going over the next 3, 5, 10 years as you're building it with your partner?
Yeah, well, over the past 4 years, I've spent a lot of time talking with people and working with people. And I've just found that there's certain things that aren't done as well as I think they could be done. And it's the simple things that could be changed to kind of make an impactful difference. So long way of saying we want to push our capital advisory to basically bring in a lot of pre-development and land loans under 10 million. And then anything over 10 million, we've really forged a lot of great relationships with lenders and capital providers who would be happy to help out projects that we perceive as good projects and things that we would do. So at the end of the day, really all we're saying is, hey, look, I would have done that project with you. There's not really room for me, but by the way, here's who I would have brought it to. If you want us to help you do that, we're happy to help put that together and help you think about the capital stack maybe a little bit differently. Dean here, he's spent 30 years at a bank. He sold his investment bank and broker dealer to BB&T and then ran their project finance capital markets for a decade. And Andrew Sinclair on our team worked at Turner Construction for about 6 years. And before that was a financial consultant to lending institutions. And I've kind of self-taught myself after Dean gave me all the wisdom that he could in regard to how to make a deal work without a lot of money. And I think a lot of people in my position don't really have a lot of capital markets advisors to go to that kind of understand it from the beginning to the end like we do. So I think we have a distinct advantage in that $10 million below kind of pre-development, bridge to construction land loan kind of field. And we also have personal investors who came to me. What really spawned this is I have personal investors who came to me and said they'd be happy to make the loans that they've seen us take before. They're like, why don't you do those? And then if anything, we know we can trust the deal because you would, as long as you would do it, we'd be happy to do it. So that's where it kind of spawned out of. And then after that, I was like, look, if I put together the hardest part, which is the pre-dev and the land loan and all that kind of stuff, like if you want, we're happy to stick around. Now the construction is not going to be that difficult. We're not really interested in bringing a lot of people equity. We would bring in our own co-GP equity or JV equity to a deal if we like it, but we're not really looking to do equity placement. And then in addition to capital markets advisory, we've begun to be fee developers for family offices and landowners. So over the past couple of years, I've picked up a few really great projects as a fee developer. And then some of those come with the option. If that landowner wants to become a passive investor, then we'll step in when the thing's ready to go vertical, and we'll do all the work basically. So just get out of the way, and they're the royal thumb at the end of the day until we put our money in and take over. But short answer is capital markets advisory and fee development, and basically owner's rep work, if you want to use a different term for it, will be what we'll expand right away. And then we've already taken steps to build out our site contracting. So hopefully for us, pretty much everything through horizontal we'll be able to do in-house, and everything from the capital stack to the actual build out. And then if people need help going past that, then we'll put them with the right groups and hopefully get their project going.
Got it. Yeah, those are some good natural spaces, right, for you guys to expand to. Already are in those spaces, and you're just, doing. It's about
using the skill set you already have, right? Sorry to talk for everybody. It's about using the skill set you already have, and so I'm doing nothing but sharpening our own skills and being able to provide those to other people. And then hopefully that helps build out our pipeline of projects, and of course makes us some money along the way. We do run a couple of charities and I'm very proud of, like the Friendship Circle Grill here in Fort Lauderdale on Las Olas. It's run by special needs folks. It's attached to the Friendship Circle of Greater Fort Lauderdale, which is another charity we sit on the board of. But to people with special needs and helps them kind of get to their highest and best ability in the workforce. And then in addition to that, we just opened up Patriot Affordable Housing to help military service members, both active and retired, so long as they don't have any dishonorable discharges. We'll help them with any equity assistance they might need to purchase a home. So we love our military, and we have a special connection to the special needs community. So we like to always mention that whenever we get the opportunity.
Hey, thank you. I appreciate you mentioning that. And then with that, I think we're basically out of time here. So Ray, thank you so much for your time and for sharing some great insights and knowledge within the development space. If our listeners want to get in touch with you or find out any more about the work that you do at Southern Waters Capital, what's the best way to get in touch?
Yeah, we always say we're always looking for dollars in dirt. So whether you have capital to place and interest in what we do, or you have a great piece of land and you want to see if we want to work with it or work with you, then you can go to southernwaterscapital.com. Believe it or not, that's my cell phone number on the website. It's also on my LinkedIn, and my email's on there as well, ray@southernwaterscapital.com. I'm very accessible. I always tell people though, if you abuse the line of communication, I will certainly have an ability to turn it off. But I welcome anybody to reach out. And, I always say if I have time, I'll give it. And if I don't, then I can't. So please, if anybody has any desire to learn more or get to know us, please don't hesitate to either go to our website, my LinkedIn, or give me a shout over the phone.
Great. Thanks, Ray. And all that information is going to be in the show notes for after, so any listeners can take a look at that. So great. Thank you for tuning into this episode of Deal Flow with me, Michael Pulio. Don't forget to give the podcast a follow on Apple Music and Spotify, and subscribe to YouTube so you don't miss an episode. And of course, if you feel like someone else could get something out of the show, please go ahead and send it to them. Feel free to comment below with regards to featured guests you'd like to see on the show, or get in touch if you think you have the knowledge and expertise to make for a great episode. With that, thanks again for me, and I'll see you next time on Deal Flow.